What is happening, crypto fam? Get ready to dive into the most explosive updates shaping the digital asset universe. The news cycle is moving at lightning speed, and you absolutely do not want to miss what's unfolding right now. We've got critical price predictions, major player moves, and market analyses that could redefine your strategy. Buckle up because this is Bitcoin Bulletin, and we're bringing you the intel you need, faster than ever. Stick around, because you're about to get the unmissable updates you've been waiting for. First up, we're breaking down the latest Bitcoin price prediction that has analysts buzzing. Could BTC be on the verge of a massive breakout, targeting an incredible $150,000? We're exploring the support levels to watch and the technicals that suggest a bullish future, but also the potential pitfalls that could send prices tumbling. This is crucial intel for anyone tracking the king of crypto's next move. Then, we pivot to the mining giants. Discover how Cipher Mining is not just boosting its Bitcoin output, but also charting a course for significant growth beyond just mining. Their latest production figures are in, their stock is soaring, and analysts are issuing high-praise upgrades. We'll unpack what this means for the mining sector and the wider crypto economy. And we're not stopping there. We're comparing the calm of Bitcoin against the storm brewing in Ethereum, looking at what their differing volatility levels mean for traders. Plus, we'll celebrate a 13-year bet on Bitcoin that has just paid off with an astonishing $53 million windfall. It's an incredible story of early adoption and long-term vision. You won't want to miss any of this. Make sure you're subscribed and the notification bell is on. The $150K Bitcoin breakout, turbulence ahead. Bitcoin is once again at the center of intense market speculation, with analysts forecasting a potential surge towards the $150,000 mark. However, this optimistic outlook comes with a strong caveat. Expect significant volatility along the way. As September, a historically turbulent month for cryptocurrencies, unfolds, traders are keenly observing key support levels that could dictate Bitcoin's immediate future. The current price is hovering above $110,000, and the stability of levels around $100,000, $90,000, and $80,000 is paramount. These zones have historically acted as critical reversal points, and holding above $100,000 is seen as a crucial indicator for a potential rebound. Technical analysis paints a bullish picture, with charts projecting a breakout target of $150,252. This forecast is bolstered by the consistent upward trend of the 200-day moving average since early 2025, a signal that reinforces the prevailing bullish momentum. Research from Investec further corroborates this sentiment, suggesting that assets within rising channels typically deliver substantial annualized excess returns. For those closely following Bitcoin price predictions, the coming weeks are poised to be pivotal in shaping its medium-term trajectory. The historical data for September shows a pattern of decreased liquidity post-Labor Day, often resulting in heightened price swings. Despite this seasonal challenge, Bitcoin has demonstrated resilience, bouncing back from recent dips and maintaining a price above the psychologically important $100,000 level. The macroeconomic backdrop appears to be aligning favorably for Bitcoin. Recent U.S. jobs data, indicating a cooling labor market, has led to lower Treasury yields and a weakened dollar. These conditions are typically conducive to risk assets like Bitcoin. Experts suggest that a combination of a weaker dollar and the possibility of Federal Reserve rate cuts later in the year could create a perfect environment for another significant Bitcoin rally. Nevertheless, the risk of a breakdown below $100,000 remains a concern, which could potentially trigger a deeper correction towards the $90,000 or even $80,000 levels. On social media, the narrative of a dip before the rip is gaining traction, with many interpreting the current pullback as a prime accumulation opportunity. However, a counter-narrative emphasizes the potential for extreme volatility to shake out less committed investors before any substantial upward movement. Adding to the bullish long-term case is the continued momentum in institutional adoption. Treasury BV, a European firm, has recently acquired 1,000 BTC after raising €126 million, signaling growing corporate interest in Bitcoin as a treasury asset. Furthermore, established financial institutions like U.S. Bancorp, Deutsche Bank, and BNY Mellon are re-engaging with the crypto space, enhancing trust in Bitcoin as a store of value and supporting long-term price forecasts that anticipate new highs in the coming cycles. As early September 2025 unfolds, the market's focus is squarely on Bitcoin's ability to sustain its position above $100,000. A successful defense of this level could ignite a march towards $150,000, potentially reigniting the bull run seen earlier in the year. However, the perennial cautions surrounding September seasonality cannot be overstated. Past events have shown that traders can be caught off guard by swift reversals. The coming weeks are critical in defining Bitcoin's price narrative. Investors are advised to remain vigilant, manage their risk exposure diligently, and await clear confirmation before committing to significant positions. Hold on tight, because the market's pulse is racing, and we've got more electrifying developments coming your way. Next, we'll dive into the operational triumphs and strategic expansions shaking up the mining sector. Cipher Mining surges, record output and AI ambitions. Cipher Mining, NASDAQ, CIFR, has posted impressive results for August, boosting its Bitcoin output by a significant 13% to 241 coins, a notable increase from the 214 coins produced in July. This surge in production is attributed to the company's expanded operations in Texas and enhanced efficiency across its mining facilities. The company strategically sold 42 Bitcoin during the month, retaining a substantial holding of 1,414 tokens. This performance aligns with a broader industry trend where mining firms are leveraging favorable market conditions and operational improvements to maximize output. Cipher Mining's strategic growth is underpinned by its substantial infrastructure, comprising approximately 327 megawatts of operational capacity spread across 4 data centers in Texas. The company is not resting on its laurels, with an ambitious pipeline of 2.8 gigawatts under development. This continuous expansion of its hash rate capability is a direct driver of its increased Bitcoin generation. The company's forward-looking strategy also includes a significant push into the artificial intelligence, AI, and high-performance computing, HPC, hosting sectors, positioning it as more than just a Bitcoin miner. This operational success has translated into strong market performance for Cipher Mining stock. It reached a new 52-week high of $8.78 during intraday trading, eventually closing at $8.32, marking an 8.9% increase for the day. This surge closely mirrored the broader cryptocurrency market, with Bitcoin itself climbing 1.95% to trade around $111,369.20 during the same period. Year-to-date, Cipher Mining stock has seen a remarkable 89% appreciation, fueled by renewed investor enthusiasm for the cryptocurrency sector and the company's diversified growth strategy. Analysts have taken notice, with Canaccord initiating coverage on Cipher Mining with a buy rating and a price target of $9. This target suggests a potential upside of 17.8% from its recent closing price, reflecting strong confidence in the company's growth trajectory, particularly its expansion into AI and HPC hosting services. This dual focus on mining and data center solutions offers a compelling investment thesis, distinguishing Cipher Mining from many of its peers. Despite these positive developments, the broader outlook for Bitcoin miners carries inherent risks. While Cipher Mining and a select few competitors have demonstrated strong outperformance recently, the sector as a whole remains susceptible to market volatility and the ever-present uncertainties of crypto regulations. Investors are encouraged to weigh the significant growth potential against these industry-specific risks, especially considering the dynamic nature of regulatory landscapes and the emergence of new market participants. Stay tuned as we dissect the contrasting volatility landscapes of Bitcoin and Ethereum and uncover a story of incredible long-term gains. But first, let's explore the fascinating dichotomy between Bitcoin's stability and Ethereum's market frenzy. Bitcoin versus Ethereum, a tale of two volatilities. The cryptocurrency market is currently characterized by a significant divergence in implied volatility, IV, between Bitcoin, BTC, and Ethereum, ETH, creating distinct opportunities and risks for traders. Recent data indicates that Bitcoin's near-term options, IV, has receded to approximately 35%, a level suggesting subdued expectations for significant price swings in the immediate future. In stark contrast, Ethereum's IV remains elevated at around 65%, signaling heightened market anticipation of considerable short-term price action. This disparity highlights a crucial difference in how the market perceives the risk associated with each of the top two cryptocurrencies. This divergence in volatility has direct implications for trading strategies. For Bitcoin, the current low IV environment is particularly attractive for volatility selling strategies. Options plays like covered calls and iron condors become more appealing when the market expects prices to remain relatively stable within a defined range. Conversely, Ethereum's higher IV makes it a more suitable candidate for directional trades. Traders might favor strategies that bet on significant price movements, especially if key resistance levels are breached. Market participants are advised to closely monitor critical support and resistance zones for both assets. The current subdued volatility for Bitcoin, as of early September 2025, also favors algorithmic strategies that capitalize on mean reversion patterns, especially when combined with low readings on fear and greed indices, which suggest a balanced market sentiment. The broader market context supporting these volatility levels reveals renewed confidence in Bitcoin, partly driven by strategic buying. However, the muted response in its options market suggests that traders are not pricing in substantial price fluctuations, which can impact hedging and speculative options strategies. For Ethereum, the elevated IV is often linked to ongoing network upgrades, such as upcoming protocol enhancements, and the evolving regulatory landscape, both of which have historically been catalysts for increased price volatility. On-chain metrics also show increased transaction volumes and significant activity from large holders, whales, indicating a cautiously optimistic but potentially volatile environment for ETH. This volatility arbitrage is not lost on institutional investors and hedge funds who are actively exploiting the BTC-ETH IV spread. Bitcoin, with its lower volatility, is increasingly being viewed as a relative safe haven asset compared to the more volatile altcoins, including Ethereum. The tighter bid-ask spreads associated with Bitcoin's low IV also enhance liquidity, benefiting high-frequency trading operations. Meanwhile, Ethereum's higher IV opens avenues for speculative plays like calendar spreads, which bet on the convergence of volatility over time. This dynamic is reshaping risk preferences within the crypto market. Adding another layer to the market narrative is the performance of publicly traded companies heavily invested in Bitcoin, such as MicroStrategy, MSTR. The company recently acquired an additional 4,048 BTC for $449 million, bringing its total holdings to 636,505 BTC, valued at approximately $70 billion. This strategic accumulation has fueled speculation about MicroStrategy's potential inclusion in the S&P 500 index, with some analysts predicting an announcement as early as September 5, 2025. The company's substantial market capitalization, exceeding $96 billion, comfortably surpasses the index's requirements. However, MicroStrategy's innovative use of preferred stock issuances to fund its Bitcoin acquisitions has drawn scrutiny. While these instruments allow the company to raise capital at potentially lower costs, they also introduce execution risks and operate in largely uncharted territory. Some analysts express caution regarding the long-term implications of this strategy. As the market navigates these complex dynamics, investors are advised to adopt adaptive strategies. For Bitcoin, opportunities lie in income generation through options, while Ethereum's volatility demands careful risk management for directional plays. Monitoring open interest and key price levels will be crucial for anticipating potential shifts in volatility. And finally, a story of patience paying off in a monumental way, proving that a long-term bet on digital assets can yield incredible rewards. Prepare for an inspiring tale of a 13-year Bitcoin investment that has just turned into a $53 million windfall. 13-year Bitcoin bet pays off with $53 million windfall. A remarkable testament to the power of long-term investment in the cryptocurrency space has emerged, as an early Bitcoin investor has realized an astounding $53 million profit after holding their assets for nearly 13 years. This extraordinary outcome underscores the immense growth potential of Bitcoin, even amidst its notorious price volatility, and highlights the significant rewards available to those who adopted the asset in its nascent stages. The success of this investment is deeply intertwined with Bitcoin's evolution from a niche digital experiment to a recognized digital store of value and an increasingly accepted alternative to traditional fiat currencies. Bitcoin continues to assert its dominance in the global cryptocurrency market, boasting a market capitalization that has surpassed the $2 trillion mark by late 2024. This valuation represents over 40% of the entire crypto market, significantly overshadowing Ethereum's approximately $400 billion valuation. Despite Ethereum's broader utility in powering decentralized applications, dApps, smart contracts, and a burgeoning DeFi ecosystem, Bitcoin's established position as a digital gold alternative continues to drive its market leadership. The approval of spot Bitcoin exchange-traded funds, ETFs, by the U.S. Securities and Exchange Commission in early 2024 has further democratized access, attracting both institutional and retail capital and reinforcing its growth trajectory. While Bitcoin leads in market cap, Ethereum is carving out its niche as the premier platform for blockchain innovation. Its successful transition to a proof-of-stake consensus mechanism in 2022 not only enhanced its energy efficiency, but also reduced transaction costs, making it more appealing for developers and users alike. In a significant shift, recent data from the block reveals that Ethereum's spot trading volume on centralized exchanges has, for the first time in over 7 years, surpassed that of Bitcoin. This development signals a potential rebalancing of investor interest, with Ethereum attracting considerable attention for its utility and technological advancements. This growing interest in Ethereum is evidenced by substantial institutional inflows into its related financial products. Spot Ethereum ETFs, for instance, recorded impressive net inflows totaling $3.95 billion during August 2024. This contrasts sharply with the $301 million in outflows observed from Bitcoin ETFs during the same period. Analysts attribute this trend to Ethereum's expanding role in financial infrastructure and its perceived potential for higher returns, often described as having a higher beta exposure to overall market movements compared to Bitcoin. The performance trajectories of Bitcoin and Ethereum over different timeframes present a complex picture for investors. While Bitcoin has delivered approximately 12x returns over the past 5 years, Ethereum has significantly outperformed, offering over 20x returns in the same period. However, in the more recent past year, Bitcoin has shown stronger performance, largely driven by the excitement surrounding spot ETFs and its increasing consideration for inclusion in corporate treasuries and even central bank reserves. This dynamic illustrates the differing investment theses. Bitcoin as a robust store of value versus Ethereum as a versatile platform for decentralized applications and innovation. Looking ahead, the cryptocurrency market may benefit from macroeconomic tailwinds, including anticipated interest rate cuts by the U.S. Federal Reserve, which could spur further asset appreciation. As capital seeks higher growth opportunities, Ethereum's potential to disrupt traditional payment systems could drive significant price appreciation. Nonetheless, both flagship cryptocurrencies remain exposed to regulatory uncertainties and broader macroeconomic shifts. Consequently, long-term price predictions remain speculative and contingent upon evolving market conditions and policy decisions. And that wraps up our deep dives for today. But don't go anywhere yet. We've got a rapid-fire recap of all the biggest stories coming your way. And that's a wrap on today's Bitcoin Bulletin. We covered the potential $150K Bitcoin breakout amidst September volatility, Cipher Mining's record output and AI expansion, the stark contrast in Bitcoin and Ethereum's market volatility, and an incredible 13-year Bitcoin bet paying off with a $53 million windfall. If you got value from this update, smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss a beat. Share your thoughts in the comments below and follow us on all social platforms for real-time updates. We'll see you in the next one.